Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, April 22nd, 5:11 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market, you can see over here in the upper right on the trend gauge, leaders flashing the big red arrow indicating bearishness, and then all five of the major indexes. First, short term, all five trending below the short term 21-day moving average, and the slope of the line has rolled over. All five also below the 50-day moving average. Line has either rolled over or is flat, and all five of the indexes still above their long-term 200-day moving average. Remember, the market doesn't get into serious trouble unless we breach that 200-day moving average. That's where all bear markets take place. Doesn't mean that you can just sit and twiddle your thumbs while higher time frames get pierced, because that's not what we do here at Revere. Time-tested rules show that there's a good time to be in the market, and there are various nuances of risky times, and tracking your time frames will lead you to what is the optimal amount to be invested in the market. So what happened today in the S&P 500 after 6 straight down days? We had rally attempt day one, broad strength, all 11 spider sectors positive, all market caps positive, all five of the major indexes positive. The big thing that stood out is how gold, silver, and gold and silver stocks just out of the blue, right from the opening this morning, down hard. They were recent leaders and some profit taking there. Here are the numbers on the day. Our 21 over 21 composite. This is the fresh batch of 21. After we reinstated this last week, only 6 of the 21 carried over to this week. So 15 new names in there, up an average of 1.13%. It's a very defensive portfolio, as you'll see when we go through the charts. 16 of the 21 up on the day, 1 flat, 4 down. The big 7, this is the Magnificent 7 and swap out Tesla for Netflix, up an average of 1.19%. RG8, this is our in-house growth, a 8 growth ETF composite. We created this back in 2021 to keep a better finger on the pulse of exactly what's going on across the growth spectrum. Up 1.1% today. S&P 500 opened up 0.55, put in an inverse head and shoulders intraday. We'll take a look at that pattern. It was almost perfect, and broke out of there, but pulled back some into the close, but still finished up 0.87%. Equal weight S&P just a bit less green on the day, up 0.76. NASDAQ 100 gapped up 0.7, closed up 1%. Equal weight a little bit better, up 1.05%. Dow up 0.7. Mid caps up 0.9. Russell 2000 small caps up 1%. Global 60/40 up 0.62. In-house GROTECTION, our flagship portfolio, up 0.35%. Our heavy cash position benefited us last week, but not today, as we bounced on at the 100-day moving average / 20-week moving average on the S&P 500. Let's get into the charts. We'll start with the S&P 500 here, and you can see after 6 down days, a bounce. We made a higher high versus Friday's high, and pulled back within that by the end of the day. Let's go to that 5-minute, and I'm going to show you that near perfect reverse head and shoulders. Let's draw some lines here, and the break above there. First a false breakout, then a true break above that level. Strong rally up to this 40.39 level, and you can see we gave back a good bit of that into the close. But all rallies have to start somewhere, and today was day one of an attempted rally. We don't make any judgments as far as what is going to happen on day 2, 3, 4, etc. going forward. But according to the O'Neill methodology, on day 4 and after, you look for a follow-through day, and you also look for strong growth stocks coming out of bases at that point, and they're kind of few and far between. They're still in the lower part of forming the right side of their base for the most part. So that would tell you you need a little bit more time. Here's the NASDAQ 100 inside day after being down 5 out of 6 days below this purple line. That's the 100-day moving average there. Let's go back to the S&P very quickly so you can see how we didn't quite get there to the 100-day, but if you look at the weekly, a bounce right there at the 20-week, which roughly corresponds, but not exactly. This is why you always want to have keep a weekly chart as well as a daily chart up. Onto the Dow. Dow ran into the declining 21-day moving average today, first of the 5 indexes to retest that level, getting back above the 100-day. Note the continued relative strength from last week, not quite as strong today, and closing about mid-range. Mid caps, let's look at the actual S&P 400 holding the 100-day. Really in no man's land. You can see the 21 coming down through the 50. They're also in the 50-day starting to flatten out. And the Russell 2000 still below the 100, between the 100 and the 200-day moving average. And the 21-day has decisively cut through the 50, and it is rolling over there as well. So those are the 5 major indexes. Let's go to the VIX. VIX big up week last week. Came down quite a bit. We were all the way up to over 21 on Friday, down to 16.94 today. So a little bit of fear coming out of the market. Let's go to the dollar. And we focus on the dollar and interest rates in all of these because inter-asset correlation can either be a big headwind or a big tailwind. That goes back to that big 2021 study that we did when growth stocks, after a great 2020, just really got hit out of the blue, and the indices, the big cap indexes, continued on as if nothing was happening. But under the surface, there were three stealth bear markets in the course of a year in small caps, and we certainly want to be aware of that and pay attention to it. And rising interest rates was one of the things that kicked off that first bear market in the first quarter of 2021. So here's the dollar consolidating for the 7th session here, right around that 106 level. And here out of the blue, maybe they just went a little too far, too fast, but that's a big move down. And on heavy volume on GLD, still above the 21-day moving average. GDX gold stocks closing below the 21-day moving average, down 4.5%. And silver bouncing at the 21-day moving average, down 4.9% on the day. Bitcoin with the halving or whatever you want to call it, completed Friday. Not a sell the news event at this point. Clearing the 50-day moving average, ran into the declining 21. I'm showing, did it again, BITO. I want to show IBIT, which is what we actually own, as they're not necessarily in sync. Here you can see IBIT clearing the 21-day moving average. The difference between the two is that BITO is a combination of multiple futures contracts, and that causes a drag on the return. So IBIT clearing the 21-day moving average, up 3.4% on the day. This is our only other holding other than a broad index long in the S&P 500 in non-taxable accounts. Anyway, we have other things hedged, other taxable gains hedged in taxable accounts. All right, on to bonds. Broad bond index, tight range today. In fact, double inside day on bonds now, coiling for a move, only up 0.04%. TLT, the long bond, down 0.17%. Also 4 tight closes there. Let's go to the yields. Yield on the long bond up 0.28%. And on the 10-year, the TNX barely higher. You can see bond yields consolidating near the top of the breakout, just the same way prices are consolidating near the bottom. So that's our inter-asset correlation charts. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. 6-day losing streak broken, as I mentioned. Day count, 1 day up, 7 days below the 8-day exponential moving average and 7 days below the 21-day moving average on the S&P 500. Expectations negative until we get back above those levels. 11 out of 11 sectors, and additionally, regional banks. Banks have been strong, one of the strong sectors, while tech has taken a break. Semiconductors bounced today, so did software, biotech, and JETS, jets. On the downside, oil, services, and gold, silver, and gold and silver stocks. No portfolio changes today. We maintain our adjusted beta of 0.34%. There are our holdings, SPLG and IBIT. Bottom line on the day, rally attempt day one with broad gains, while gold and silver got smacked. So we've got a bunch of earnings coming up later this week. A good bit of the S&P 500 reported earnings, and that reaction, and more importantly, the outlook, is what will dictate whether or not we continue to head lower on the indexes or put in a bottom and see some leaders emerge. All right, let's go to the 21 over 21 list now. And we'll start off with the 6 carryovers. And again, this is a decidedly defensive 21 over 21 list, but we're looking for relative strength, and we're looking for stocks with some reasonable growth above their 21-day moving average. Raytheon has been trending higher. You could also have General Dynamics or Lockheed Martin in here. You can see the relative strength. They've got earnings tomorrow, so we'll be very interested in that reaction. Charles Schwab breaking out of a tight consolidation here. You could also have Interactive Broker, IBKR, on here. First Solar, undercut but reclaimed the 21-day moving average by the close. CCJ, uranium, undercutting, closing right on the 21. Freeport McMoRan, copper weak today, along with some other commodities, undercutting but holding the 21. And the last carryover from last week, CPNG Kupang, consolidating after a nice breakout on raising of fees, a nice breakout of this cup and handle that we see here. All right, here are the new ones. TBT, this is an interest rate play. I showed how interest rates were consolidating. TBT is a way to play it. As bonds go down, this goes up. So think of this goes in sync with rates. And then the rest is individual names. Singapore Internet Retailer, CADR. You can see it gapped up today, forming a nice base. It had ants a month ago. This is when you're up 15 out of 17 days. Bounced nicely at the 50-day moving average last week. Good recent volume patterns as well. Goldman Sachs, they say what's good for Goldman is good for America. Well, nice performance today. Since their earnings report, making a higher high, so that's good. And you can see positive volume patterns and relative strength as well. And this is an area where money has been flowing into. Google, the only one of the big 7 really maintaining its space above the 21-day moving average. United Airlines continuing to power higher after its earnings report. American Express, day 2 higher high after its earnings report. Genuine Auto Parts, is there a more defensive sector? I don't think so, but that's a nice reaction after earnings. Good volume patterns as well. AVB, we stuck a REIT in here. Severe lack of housing in the U.S. They develop and operate 279 apartment communities in the U.S. Their product is very clearly in demand. REITs got taken apart. In generally speaking, as interest rates were going up, so to see one forming a pattern like this is noteworthy. And a lot of this list we want to root against. It's kind of odd. We actually want to see some of these things fail so that more money flows back into growth, and keeping our eye on these defensive sectors is a way to do that. AEM, there are 2 other gold miners that are liquid enough that could have been on here. Newmont and Wheaton is the other one. But AEM pulling back, not bad today, down 2.5%, less than the GDX. Generac, this was a big winner a couple of years ago, went into a severe decline, and forming a nice base and above the 21-day moving average, earnings in a week and a half. RSG, another defensive pollution control services, relative strength at a new high for at the top of a nice flat base. IFF, International Flavors, they make fragrances and flavor for foods. I hope they don't ever get the two of them mixed up. But anyway, it's above the 21-day moving average and one of the better looking charts with relative strength. Texas Roadhouse. This is a lot of restaurants had a good run. This one is holding up the best. Probably Wing the second best, but you can see the relative strength at a new high here, and that looks pretty good. Exxon Mobil oils. This is resting, putting in a nice handle here after this big cup base. Chevron and Exxon report at the end of the week. We'll keep an eye on those reactions. But oil's after a big run, oil's taken a rest out over the past 2 weeks, and Exxon putting in a handle there. And a new one. This isn't an IPO; it's a spinoff from GE. This is their new alternative energy spinoff called GE Vernova. We haven't done much research into this one, but it's holding up very well, and we've got an alert there at 140. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION. Serves a dual purpose, that purpose being to compound growth, compound assets, stay very involved in market leadership when the market is in an uptrend, and get defensive. That's the protection part of GROTECTION. When the market weakens or starts to roll over, especially when it breaks the short and medium term moving averages, we'll stay. Now we're out of every individual name, every individual ticker, growth name. We'll wait for better times to put more money to work there. We'll stay engaged with. We have various amounts that we stay engaged with the S&P 500, and today's a classic example of that. Lighten up when we're below moving averages. That's one of our rules, but stay somewhat involved while this thing bounces around between moving averages, because we really don't have an edge. But you can get, a day like today, and then maybe tomorrow you gap up another percent. And if you're not engaged, you don't get any of that return. So yes, we saved we had some alpha last week by losing less than the market. That flips on its head when the market starts to rally, even when leaders aren't there. And that's part of sector rotation. And we saw more of that now the last three sessions. It's been more rotation and now a bounce as tech really led for a long time. Certainly, there are no tech leaders, very few tech leaders left, but plenty of places for the money to soak up. And that's what we're interested in. Is it all coming out of the market, or is it rotating to other areas? If it was completely coming out, I wouldn't even have a 21/21 list. And there were honestly 50 stocks that I chopped down to 21 where the charts look okay. But if you've got no sales growth, even though you have earnings growth, I'm not interested in you. But these are some decent companies that are in here, and we'll monitor them. If they start to falter and we see money coming back into growth, and the 21/21 list will turn back into a more growthy list. And that's how we track things here at Revere. And with that, I'm going to wrap it for Monday, April 22nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.